So there's a new format for making presentations so that all of you can stay actively involved. They will give a presentation that's a new model for telling your story. And it's now in 900 cities around the world. It's very big in Vancouver. It's Buenos Aires, Taipei, Mumbai, wherever you go, this system of 20 slides, 20 seconds per slide, 6.4 minutes, and the gong comes out. And if you like their presentation, then I highly recommend you go visit with them, because we've made an investment in our World Precious Metals funds in these individuals. We have one gold producer, and we have lots of great brownfield here. So let's start it off.
Hi, I'm Dale Ginn. I'm the Vice President Exploration for Bonterra Resources, and we're located northeast of Val-d'Or in Quebec. We're a high-grade new discovery, essentially. Been in the Windfall, or south of Windfall, about 8 kilometers. We've been there since 2010. There was a small discovery made, and we've been building on it over the last 2 winters ever since. We're well financed. We just completed a $20 million bought deal, brought in some very good shareholders, Kinross and Sprott and Osisko. But effectively, we're in the yellow, where in the northeast direction there's a greenstone, kind of a fault trend, and we cover about 30 kilometers of that trend. The mag basically shows you what we're looking for. We're looking for kind of folds and bends in the in those mafic rocks that strike to the northeast. You can see the location of our deposit, and then we're also exploring about 10 kilometers to the southwest of it. So blowing it up, there's a 3D picture of the deposit itself. So it's a classic ductile brittle setup. There's about 6 different veins we've found so far, but the main thing is we've found continuity over about a 1.5 kilometer strike length. So the same sort of thing in a cross-sectional view. We've got nearly 1 kilometer in depth now that we've drilled to. So essentially it's a series of stacked lenses, high grade, about 2.5 meter sort of average widths. And for sure 2 of the lenses now have been drilled. Again, there's a long sectional view, but we've drilled it to about a 1.2 kilometer length and a 1 kilometer depth. So it's getting to be quite sizable, and we're proving the continuity quite nicely. Drill coverage is obviously more intense closer to surface and less as we're going deeper. These are some of the results. The most recent results basically hit 2 new zones near surface. As the drills step back to go deeper, we continue to encounter these new zones. This is what we started with. So this is like the before picture 2 winters ago. We had a small deposit, 200 meters long by 200 meters in depth. It already had a 43-101 on it that had 273,000 ounces at 9 grams. Next, what you'll see is the after picture. So basically, within 2 seasons of drilling, we took that small deposit, we linked it to another showing to the west, created a 1.2 kilometer long, basically a discovery. But the key is that there's multiple lenses. The next one, the next slide you'll see is the footwall lens, which is another parallel lens. You can see that we're basically getting the same type of dimensions and the same type of drill coverage. So essentially it's building up to be a very nice size, and our model is working. So this is a level plan at 200 meters. What you see is all the different named horizons. So basically north, footwall, main, and then 2 new south zones you can see starting to build up on the south side. The pink units are a felsic porphyry, so they're a mineralized unit that's quite common in the Abitibi, especially in the Timmins, Kirkland Lake, and in some of the bigger, most of the deposits in the Quebec area that we're in. a couple of cross sections, so that's in the middle of the deposit. And this one is quite nice because this is a big step out to the west in what we call the Rivage Gap. So this is an area that had no information until recently. We've been filling it in this big gap, and it's fleshing out quite nicely, just like the main zone. Now, more on the exploration side, stepping about 4 to 10 kilometers to the southwest, these are till samples, so they're big numbers of gold grains in the big red dots. Basically, we've combined our geophysics with the till, and we've got a trend, you can see here quite clearly, that we're following. It's got sulfide, and we're edging our way towards the pink star, which is a big soil anomaly base metal. So, you know, not only do we have a fairly decent size of a deposit building, but we have a good exploration side as well. Our second project is east of Kirkland Lake, Ontario. We have 3 gold deposits we bought last year for about $4 an ounce. There's nearly 1 million ounces on the books with 3 deposits. So we control about 10 kilometers of the Kirkland Larder break. Previously, these deposits were developed as 3 distinct deposits or mines, and different times, but really they're all the same deposit over a 4-kilometer strike length. That's the way we're treating it. These individual mines were just individual chutes within the bigger deposit. So a cross-section and a plan, basically we're looking for structural interruptions along the Kirkland Larder break. So obviously we have deposits in that 4 kilometers, but this Larder is just a secondary to us now because of, you know, the big success we've had in the Quebec camp. And then just a final word on the company structure and management. Basically 3 geologists, 3 financial guys. Perhaps we'll bring an engineer in soon, but a very strong shareholder base. And that's it. That's the quick and dirty on Bonterra. Thank you.
So our next speaker is Rob McLeod, and he was just informing me that Don McLeod just passed away yesterday. And Don McLeod was a mentor of mine when I first got in this space in 1978, and I wrote up my first company as a research analyst was International North Air. So my condolences to his family. But on an upbeat note with that, we recognize and appreciate those great miners in Canada, and Don McLeod is one of them. And now we're going to do IDM Mining.
All right. Thank you so much, Frank, and for mentioning my uncle. God bless him. IDM Mining is named in honor of him, Don McLeod, and my father, Ian. Both had a tremendous impact on the community of Stewart and Northwest BC. Red Mountain, we're looking at being in production in 2019, one of the few near-term producers in Canada, and it, like my uncle's legacy and my father's legacy, is going to have a tremendous impact in the north. So certainly on an investment side, one of the few near-term producers, and also tremendous exploration upside. And it's an honor to be working in their turf, Ian and Don McLeod. Thoughts with Catherine and Bruce. So here we are. We're in the famous Golden Triangle, richest area in Western Canada by far for gold. We're south of the recently being commissioned Pretium's Bruce Jack mine, significant historic producers such as SK, and we're just outside of town. You know, rugged mountains here, but we have close to road access and grid power. Very friendly mining jurisdiction, and this is a phenomenal deposit. It's a wide ore body, it's high grade. In a couple of weeks, we're going to announce our feasibility study. We think the market's going to be really impressed. Permits coming first quarter of 2018. This time next year, we should be in production. Photos don't do this part of the world justice. This is a 9-kilometer wide view window. The deposit's near higher up in the Alpine. But what's an interesting exploration aspect is the rapidly melting glaciers. Where it says Lost Valley, we've discovered a new porphyry with high-grade gold veins that when I started my career here in the 90s was still under glacial ice. So what's high grade? 8.75 grams per ton with a good silver credit in addition. all measured and indicated, wide, averages 16 meters in thickness. It's going to be a lower quartile gold producer. It's affordable, affordable capex, tremendous exploration upside. Share structure, we're at about a 50 million market cap. We trade a lot of stock, 350 million shares out. Great institutional base, including U.S. Global, a lot of Canada, U.S. funds, and 4 corporates. 2 named Osisko, Royalties and Mining, as well as Premier Gold and Kinross. So zooming in a little bit closer to my hometown of Stewart, Deepwater Port Facility. It's a mining town. We've got a great crew of local miners. We're close to the low-cost grid power. There's a road that gets us within 5 kilometers of the deposit, and we're in settled First Nation treaty territory of the Nisga'a. After this talk, I'm going up there because we're doing impact benefit negotiations. What do you see in the feasibility study? 1,000 ton per day operation, good recoveries between 86 and actually up to 93% gold. We're going to produce gold, silver, doré. We're not going to need a camp because the crews live in town. Quick payback period, less than 2 years. What's a knock? 6-year mine life, but we're growing that this year. So here's what the site will look like. We're going to be about, mine's about 5 kilometers away from the mill. We're developing our mill and tailings facility to best available technology. This will be the only road accessible gold cyanide plant in northern BC, allowing us to toll treat the numerous deposits that you get in northwest BC. Permitting, we're all, a lot of us are British Columbians here, and the province has an undeserved bad rap. It's a really quick and efficient permitting process. 180-day review period. We're going to file our final application within the month. We expect to get our permits in the first quarter, our EA certificate with Mines Act permits to follow. It's going to be a quick build for a mine of this size. We're looking at commercial production by mid-2019. So it's going to be a bit of a range, annual production between 70 and possibly as high as 100,000 ounces. All that will be flushed out in the feasibility study. There's not many of these in Canada. Here's some geology. This is a plan view on the right. Mineralized zones offset by faults. You can see the existing 2,000 meters of production size underground development, well drilled, consistent grades from hole to hole. This is not nuggety at all like Pretium, like Valley of the Kings. It's a conservative resource and very robust. How are we going to grow it? We're currently drilling this northern extension. We have about 1,000 ounces, or for each meter, we add about 1,000 ounces of gold typically in this system. So it's our objective to get this project up to a 10-year mine life as quickly as possible. One of the best ways is to the north, where it's still wide open. And the other area is actually down dip here. So you see there's a big fat area up to 40 meters thick. It's super low cost to produce. We're chasing that tail. We've got some drill holes coming out that are going to be 200-meter down dip step outs, which, if successful, should demonstrate the tremendous upside near mine potential. This is all underground drilling. As we increase our drill density, our grade goes up. Our average measured grade is 9.4 grams per ton. Our average indicated 7.78. Our global resource, we're not supposed to add these up, I will though, is 650,000 ounces. Again, we want to get this up and over 1 million ounces in the near future because the zones are wide open. We just had our first 2017 underground drill results last week. 25 grams, 25 meters of 6 grams, 6 grams, or 6 meters of 12. Very consistent. And these are all incrementally adding more and more resources to our project. But go to our website, come to our booth, review our press releases. And then tons of exploration upside. This is one of the new structures that melted out from under the ice that we discovered last year. No geologist had ever been here. There's not even a plant. High grade, tough to see, but ounce type gold grains coming out of quartz veins, cored by a lower grade gold molybdenum intrusive. Why should you buy our stock? We're embarrassingly cheap. We're at about 0.35 to 0.45 price to NAV ratio. And that's going to be, once our feasibility study, even more of a delta. There's Integra has just bought out very few near-term producers left in Canada for producers to acquire. So why IDM? Beautiful ore body, great ground conditions, wide structure, high grade, great jurisdiction, advanced permitting, great shareholders. Challenges, can't do anything about the weather and steep terrain except have good engineers and operate safely. And the 6-year mine life, we're going to expand it this year. Thank you very much.
Thank you. This is good for everyone. Stay focused, stay focused. Now is Roxgold again.
Good morning, everyone, and I'd like to thank Frank for having Roxgold here in Vancouver today. Roxgold, we are a mining company with a high-grade gold deposit in Burkina Faso. The deposit was put in production just last year with the initial discovery, which was done in 2011, so I'll cover that in a slide later. The cautionary statement, this is the only slide that's going to feel a little slow for the 22nd. I just want to point out to our QPs, myself on the geology and resource side, our COO, Paul Criddle, and then we also have SRK, Benny Zhang, and Sebastian Bernier. So here's a location map, and just going to take you quickly to a snapshot of the company in the first few slides. We're located in West Africa, mainly in Burkina Faso, and you can see here in the left corner of the circle, this is the Houndé Belt. So we have Semifo and Endeavour that are north and south of us, and we have the ground just in between those two companies. So like I said earlier, 5 years from discovery to production, which is a very significant achievement for any companies, especially in West Africa. Initial discovery in 2011, and as you can see, we produced the first ounces in May 16, 2017. Just a few highlights of our Q1. You can see there 36,000 ounces almost of produced ounces. Cash operating costs at $400, all sustaining costs at $720, cash balance of $53 million, and in the graph below you can see the profit between the costs and the price of gold for that quarter. Here is just a guidance for the rest of what the year is going to look like for 2017. You can expect us to produce between 105 and 115,000 ounces. Again, produce almost 36,000 ounces. And again, you can see the costs and what we're expecting to do for the rest of the year, quite in line with the Q1 costs and the capital expenditure. Here's just a quick slide just to compare our costs to our peers. You can see here our neighbors are listed in that graph, Semifo and Endeavour, and you can see that Roxgold is all the way down on the left-hand side with the lowest costs among our peer group. Now that we've looked at the snapshot of the company, we'll just take you to the operations, the development projects that we have in the near mine operation. Here's a picture of the underground mine, which is Zone 55, and we're looking at the ramp now with some worker doing some inspections down the ramp. So here's a map of the site. You can see the Zone 55, which is just south of the plant. That is the deposit that's currently in production. 1.8 kilometers to the south, we have our advanced Bagassi South deposit. Right now, that deposit has 220,000 ounces of inferred material. Here's a look at Zone 55 along section. What's in gray is what's been mined already. In red is the plan for 2017. You can see that the decline is going to go to 5066 by the end of the year, and we're currently at 5134. The topo is at 5300. Here's what Zone 55 looks in a long section. You've got in the background here, that's the block model. And then you can see recent holes that we're chasing right now. We have 10 holes that are planned for 10,000 meters from the surface, and that is going to follow high grade, deep at west, and then below. This is a longitudinal of the Bagassi South project. That's the project that's 1.8 kilometers to the south of Zone 55. We just finished about 25,000 meters of drilling along the main structure, which is QV1, and you can see some of the highlight holes that we put out in a recent press release for that structure. Next structure here is the QV prime structure. You can see here on the right hand side in Lyre that QV prime is located about 120 meter to 200 meter north of the QV1 structure. And right now that structure only has 10,000 ounces of inferred material, and we've had some significant intercepts in the recent program. Here's a history of the mineral resource growth at Yaramoko. Top graph in green, that's the inferred resources. Below is measured and indicated, and you can see that the grade for the inferred has been consistently going up, and the grade for measured and indicated has been fairly stable throughout the years since 2012. Here's just a graph of what the reserve looked like and what the inferred at Zone 55 in the middle graph and the inferred resources at Bagassi South could potentially become into a potential plant feed. So you can see that we have a reserve to 2023, and then we're going to start producing most likely at Bagassi South in 2019. I'm happy that I put that slide there just to take a bit of a breather. You know, I don't really have to talk about anything on that one, but just that we're going to move on to regional geology. You can see that there's two main structures here. That's the geology of the property, and we're going to look more into detail with those two structures. So like I said, those two structures, the one that is northeast, southwest is the Bony Shear structure, divides the concession into a western sedimentary package and an eastern igneous package. All the deposits are located on the Yaramoko Shear. You can see here the Zone 55 in Bagassi South, and we have numerous targets that are going to be focused in Q3 and Q4. We're currently doing 4 IP surveys, or 2 IP surveys and 2 pole-dipole, and these are chasing some structural disruption that we see are generally associated with mineralization. So just to wrap up on the exploration outlook, we currently have 4 ground geophysical surveys. We are doing a mineral estimate on the Bagassi South following the completion of the drilling program. We have a drill program of 10,000 meter going on at Zone 55, and the regional program following up on the geophysical survey is scheduled to go in Q3. So why invest in Roxgold? These are the upcoming catalysts. More drilling at Zone 55, Bagassi South drill result were just released. We are going to be releasing an updated resource estimate for Bagassi South, and we will do a feasibility study that is coming in Q4. Thank you very much.
And that was Mike Davies, CFO for Gran Colombia.
Great. Good morning, and thank you, Frank, for the opportunity to present this morning. We'll be making forward-looking statements this morning, so our typical lawyer's advertisement. That's a long 20 seconds. So when most people think about Colombia, they think about this guy. Or they think about those guys in Narcos on Netflix. And we at Gran Colombia want to change that perception. We're the largest underground gold producer in Colombia. We did 150,000 ounces of gold last year, and we're currently on track to do up to 160,000 ounces of gold this year. All right, we have 3 core projects in Colombia. Our Segovia operations does 84% of our production, high-grade, narrow underground mining operations. At Marmato, we have one of the top 20 undeveloped mines in the world and represents significant optionality for us on gold. And we recently announced that we signed a JV with IDM Gold to do some exploration on our Zancudo project. At Segovia, we've got over 2 million ounces of gold identified through 3 major drill campaigns. We did 10,000 meters last year, firmed up our measured indicated resource, and they're in high-grade, narrow veins, averaging 11 grams per ton across the resource base. And in 2017, we're going to follow that up with a 20,000-meter program that's already underway to extend the resources to other areas within our title at Segovia and to continue the infill drilling that we need to prove up the resources ahead of our continuing development plans, particularly at our Providencia and El Silencio mines. Now, back in 2011, when we first started taking people to the mines we'd acquired at Segovia in 2010, it wasn't uncommon to take people through very antiquated-looking mining areas, such as this one at San Roque, and to have people wondering what we'd bought into. But over the last few years, we've been working on a modernization and mechanization program at Segovia, and it's starting to pay off for us. And as you can see in this area of the Providencia mine, which is one of our core mines we're working on right now at Segovia, we're putting in modern, safe accesses to the mines and improving the infrastructure as we build out the areas taking us forward. But it doesn't just stop at the infrastructure. We're also working on mechanizing our underground equipment. And as you'll see in this slide, which actually this picture won an award recently at PDAC, we're putting in mechanized equipment to support the jackleg hammer type drilling that typically goes on in the stopes, scoops, jumbos, and this Mookie that we bought from a company in Peru to mechanize the operations and improve our material handling underground. We also acquired a mill when we bought the assets in 2010 that initially produced 400 tons a day. That mill's been expanded and upgraded over the last couple of years and can now handle up to 1,200 tons a day. And we're a little bit of a capital investment away from being able to take that up to 1,500 tons a day as we expand our operations. Community is very important to us at Segovia, and we've established a trust in which we deposit funds that are used for community programs, such as the schools in Segovia, to which all the children go. We have a contractor mining method, a model that we've set up that's employing over 2,500 miners locally, and over 12,000 people now get access to social benefits through the government programs by working with us. We've consolidated ownership around Marmato, a mountain of gold with over 14 million ounces of resource identified, and we've got over 90 million ounces of silver. We also have a small 24,000 ounce a year gold producer at Marmato that's continuing to be in operation. And what's most important to us at Marmato right now is the area that I've identified here in red below the currently identified ore body. It's a deep mineralization discovered at the end of 2012, which we followed up with a hole in 2016. And it provides a potential opportunity for us as to where we'll first start developing the Marmato ore body as we move forward. So we're very excited about that. The payoff for us, as you can see, growth in Segovia through the modernization and mechanization took us up to 126,000 ounces last year, and another 24 from Marmato brought us to 150. Our annualized run rate at the end of March is now up to 157,000 ounces. So we're continuing to build out our operations in accordance with our plan. We've also focused significantly on our cost, bringing our AISC down to an average of $850 an ounce last year and expected to be below $900 an ounce this year with the additional investment we're putting in exploration and development. That work has culminated in a result for us where we are now coming up. We're near the top of our class when we benchmark our AISC against the industry peers in 2016. And when we look at where we are through first quarter of 2017, we continue to be in the top of our class. And we believe that this provides us a sustainable model as we move forward to how to control cost, the key thing we can control in this environment, and generate cash flow. All of that's paid off for us with a significant growth of our adjusted EBITDA to $66 million last year. We're currently on a track record for $68 million at this point. It's providing us the critical mass of cash flow we need both to continue to invest in the capital in our mines, but also to start setting free cash flow aside for the retirement of our senior debt. We currently have 3 listed securities, common shares, which will also include the 2018 debentures as we convert those at maturity next year. 2020 debentures, which are currently traded and we're buying back through a normal course issuer bid with our excess cash. And later this week, the 2024 debentures will be created as $47 million of our debts extended. You probably see this on a lot of company slides, but by every benchmark we look at, we're undervalued relative to our peers, despite what we've done the last couple of years at improving our operations, executing, meeting, and in some cases exceeding our guidance. So why invest in Gran Colombia Gold? Well, I think what you've seen this morning, we have a very attractive entry point for our common shares and our senior debentures, high-quality assets, in-country expertise in mining in Colombia. We're cash generating. Our excess cash flow is being used to reduce our debt and strengthen our equity. We are a solid citizen in the country in which we operate, and we've got significant expansion in our resources. So thank you for the opportunity. We're at booth 505 if you'd like to drop by and talk a little further detail.
So at US Global, we have a diversified set of holdings from grassroots to brownfield to producers, and that's what helps us win overall in a diversified portfolio. In particular in Gran Colombia, we own the gold notes, and the gold notes pay monthly. And so in the past 5 years, most gold funds are still down. You saw the chart I showed earlier, it was down 50%, the GDXJ. However, we've got all our money back, plus owning the gold notes, which pay monthly. So right now, I think the yield's about 8%. And you're getting that annualized, but you're paid every month from the production, and it gives you the convertibility into the stock. So it's been what they call, as a portfolio manager, it improves our Sharpe ratio. That is, it buffers in the downdrafts because the convertible note holds itself better in value on the downdrafts to the stock, but then it participates with the rise in the price of gold or the stock. So that's why we have most of our money is in. Mike Davis has done a great job of turning around the operations. Its market cap is less than its cash flow. And it's this whole idea of going through that restructuring. So great opportunities from Africa to Canada to Colombia. I think the bigger part coming in Colombia was recently Newmont going into Continental Gold. They paid a premium for that, and that's a very important part because Newmont usually doesn't go into these countries without lots of risk, and the fact that they went into it is probably a better sign for the country itself, because Newmonts of the world and the Rio Tintos are actually run by lawyers. And are always petrified wherever they go into. So I think these are sort of positive notes when you look at global investing. I hope you find this interesting, 6 minutes and 40 seconds. and it gets you tickled, you get your dendrites flowing like you're a quant analyst. You go around, you can do one-on-ones, you can sign up on the technology that Jay has talked about earlier, or you can go by and visit their booths and learn more about why we've invested in these companies and this great management team that's up here. Thank you all. Let's enjoy the conference, and I'll be speaking later today about ETFs. Thank you.